Hello, everybody. So I had somebody request that I do a video or something about our process. So hopefully I can keep this to less than 10 minutes. But basically, just a general overview of how we do things. So, and some deadlines and things like that. So, um, the first thing we do is in January, February timeframe, we send out the request for tax documents. The main one being the home office reimbursement sheet. Quick background on that, we call it the reimbursement sheet because it is your corporation reimbursing you for use of your home for office space. So that's literally why we call it the reimbursement sheet. It's more of a formal corporate document. Anyway, so typically that is, as I've talked about many times, the home office deduction, the rules behind that. On average, we find that most clients are getting more than a $10,000 deduction through proper use of the home office deduction. For most clients, that could mean anywhere from $1,000 of dollar for dollar tax savings all the way up to about $4,000 of dollar for dollar tax savings, just depending on your tax brackets. Because of that, it is very important that we get that back. And it is very hard to start preparation because tax return preparation is so extensive that it's very difficult to start your tax return until we have that back. So we use that as the initiating document we receive to start preparation on your tax return. So it is very important that if you want us to start sooner, you get us that back ASAP. Or if you feel like you don't need to do the home office deduction for whatever reason, maybe you were traveling the whole year, you're living with your parents, you're really, those are about the only two reasons that I can find why you wouldn't take a home office deduction. There might be a few other reasons, but for the most part, when people tell me they uh, don't think they need the home office deduction, usually it's just we need to explain it a little better. But yeah, we won't start your tax return until we have that sheet back or you have confirmed that you are not doing one. So then we will put your tax return into the preparation status. The sooner you get us your stuff, the sooner we can get started on it. And typically, that means earlier in the year we can get things done faster because there's less of a line. Later in the year, we have a lot of people hurrying to get us all their stuff, and that really bottlenecks stuff, and it takes longer to get stuff done, which is where we're at right now. But anyway, so typically what we do is we send out those requests in January, February timeframe. I don't like to file tax returns until after March 15th because every year Congress does extenders and passes tax laws, and typically they don't get those passed. It used to be they would pass them in October when the fiscal year is and budget is all done, but for the last 5+ years, it has literally been that they pass the tax extender bill usually in February, and it affects the prior year taxes. So because of that, I really don't like to file tax returns start filing until the end of March. However, the corporate soft deadline is March 15th. So typically our process is we send out those requests, we start working on a few tax returns, and then we just push hard and file a whole bunch of extensions on March 15th for all business returns. Then we really start working on tax return preparation after that, start filing. The soft deadline for individual tax returns is April 15th. Uh, Again, we spend a lot of time around April 15th just filing a whole bunch of extensions. And then we work on tax returns all summer long. I've done several videos. I've sent out multiple emails for our reasonings for doing that. Feel free to reach out and I'll send you the link to our extension policy video that is out there. So then we just work on tax returns. We put them in the pipeline uh, based on first in, first out for the most part. And that's really, like I said, the initiating factor is getting that reimbursement sheet. We do have a few rules for priorities. most of those things come because of third parties. For example, a client is trying to buy a home. Mortgage company underwriting wants to see the tax return before they will approve it. So we typically prioritize those and try to get them out as soon as we can. Other than that, it's first in, first out. I find that that's a pretty fair policy because everybody tries to buy a home or need a mortgage or a loan at some point. So everybody gets to take advantage of that at some point in their lifetime as my client. So that's what we do there. There's a few other reasons. Sometimes it has to do with divorce and court or custody. Like there's it's always a third party is saying you're going to be in trouble if you don't get a tax return to us. So we prioritize those. Then all year long, all summer long, we work on taxes. We get them done as fast as we can. And then that's really dependent upon, like I said, workflow and the number of people that have sent us their stuff. Then usually around June, we start harassing. June and July, we start harassing to get tax documents because by that point, we're getting later in the year and we're getting closer to the deadlines. And as we get more and more stuff in, it can take a month or more to get through an entire tax return preparation. And I'll go through the whole process of that in just a second. I'm just kind of going through the timeline right now. So then the hard deadline for business tax returns is September 15th. And for individual tax returns, it's October 15th. So with that being said, that's why we start harassing around June, July timeframe because it's going to take about a month. Then, and I've sent out emails about this before in the past too. If you get us your stuff, I think it was after June we were going to charge a 10% increase because now you've waited until the end. If you get it to us in August, now we're literally in rush mode and I'm going to force my staff to start working overtime, which means is increased expenses because you procrastinated until the end of the year to get it to us. So there's another 10% penalty there or a 10% price increase because now we're rushing. So that's kind of the timeline. Other things outside of that, there is payroll taxes due, and which is Medicare and Social Security. So if you're an employee of your S corporation, which most people are, and you've met the thresholds to require payroll, we file W-2s in January, and payroll taxes or Medicare and Social Security taxes usually due by January 31st. And then we file zeros the rest of the year, so you don't owe anything else. This is general. This isn't everybody. This is general. And then generally we file, you owe unemployment tax with the state that you live in. And that's regardless whether you're an employee of your company or not, whether we ran a W-2. Unless you're a sole proprietorship, you're going to owe unemployment tax with your state. Few exceptions, depending on your state. But most of them, that's the case. And typically we do that the first quarter of the year as well. So that would be due in March, by March 31st. And it's usually not very much, a couple $100. Each state's different. Each state has a few different laws. The laws changed really because of COVID. Before you were what was called an uncovered employee. So you didn't get unemployment. Well, COVID changed everything and a lot of the states changed their laws. And so we do have a backlog of registering our clients with various state unemployment accounts. We've been working through that. Many of you have received that email saying we're working on it. Typically, the way it works is once we get you registered, you will owe that unemployment tax a couple $100 either that quarter or the next quarter after we register you. And then in general, it will be the first quarter of every year. Then we file zeros the rest of the year because it gets capped out at like a couple $100 a year. So those are kind of the big timelines. So taxes, payroll taxes due in January, unemployment taxes due in March, and then income taxes. Technically, like I said, you can watch the extension video where we talk about that policy, but income taxes are usually due April 15th. Whether you pay them on the 15th or not is up to you, dependent upon when we get your taxes actually done and you know how much you actually owe. Okay, so that's kind of the timeline. Let's talk about our actual process. So the reason why it can take a couple weeks to get a tax return done, and this is pretty standard for every CPA firm I've ever worked in or any other peer I've ever talked to, this is the standard procedure. and it's because it works well. So we have a preparer who is the lowest billable rate, right? So somebody usually 1 to 2 years out of college, working on their CPA exam, trying to get their license, but they're the lowest billable hour person in the firm. They do the basic preparation. So they take all your work, they formulate it into organizable documents, they review everything, and they put it into a tax return. um, Basic idea there, what we do is basically an audit defense, and I've done another video on that, but we build a complete case file for every tax return, keeping all the documentation that we need in the event that there's an audit. We at least have a very clean starting point to provide the auditor with the information they need to help decrease audit time and your audit bill. So we start literally every tax return with the idea that it could get audited. We pray it never does, usually doesn't, but we build a case file for you. So that's what the preparer is doing. Then once they're done with it, they move it to a reviewer who is now probably somebody who has their CPA license. They've been out of school a few years. They have more experience. Their billable rate's slightly more. And that way they spend a little less time in it than the preparer does. But then they go through and they review everything that the preparer did and make notes, corrections, stuff like that to make sure that we have a good product for you. It might go back to the preparer for corrections. It might be done and they pass it on to me. Then once the reviewer is done with it and everything looks good, it comes to me and I do or whoever. Right now I'm the only account manager, relationship manager. That's going to change in the next year or two. But then the final person who signs it and sends it to you does a kind of a general review of it to make sure everything is flowing the way we expected it to, based on like my conversations with you, the few notes that I've made throughout the year, and things like that, right? Like I'm doing a general, let's make sure this is what we expect it to be type review, and things look kosher. And so I then print it, send it to you for e-file authorization signature for you to review. And then once you do that, you send it back to me and I submit it. We e-file it and invoice you if invoice is needed because you're not on the prepay program. So that's kind of the general process that we do for tax return preparation. Initiating factor is getting that reimbursement sheet or confirmation that you are not actually doing one. It goes to the preparer. The preparer reviews everything. They send you questions, and a lot of times things end up on the preparer's desk for a little bit of time because we're waiting for information back from the client. And then it gets jumbled into the workflow. Well, once that gets done, goes to reviewer. Reviewer makes any corrections or sends it back for corrections. And then once it passes them, it comes to me. So that process can take a week. It can take 2 weeks. It can take a couple months, just depending on other projects that are in the workflow at the time and how fast you are to respond to my staff's requests for information. We always do the corporation first or the business return first, because then it flows into the individual return. So we get that done, and then we do the individual return. We do that for efficiency, mainly because if we have a whole bunch of changes in the business return, it's just adding time on the individual return as we constantly carry those changes all the way through. So we wait until the business return is done before we start on the individual. Anyway, I hope that's helpful in understanding our process and the deadlines that come throughout the year. Thank you, and hope you have a wonderful weekend.